What's up, guys, and welcome back to another episode of the weekly Stully Stocks Report right here in the Stully Boys community channel. Your host, of course, Talos, reporting the news, the stock news regardless. But today we have quite a few topics to talk about, and it's quite a doozy as per usual. Today is going to be a kind of a big topic when it comes to the financial institutions, but we'll get into that as we roll into the very first clips. Now, of course, from the corners here, right here in this corner, yeah, that corner, all the topics we'll be discussing. Obviously, the first few are just going to be kind of more of a follow-up than anything. Of course, Talos Energy, gotta be in there. Now, I believe they're actually a little bit down in the week, if I recall, so we'll definitely kind of follow up with that. Obviously, Roblox, of course, big in the news, still kind of up there. They actually went up about 4% today, so that's actually good. So we'll do a quick follow-up on that to see how they're doing in the past week. And then we're getting some new topics here. The first of the new stuff, of course, is a company known as Super League Gaming Incorporated, and definitely a big, massive growth. So we'll definitely talk about that. Next, of course, is Upstart, a financial institution, but actually doing quite well. Facebook, of course, doing exceptionally well this week. Now we're getting into the lows now with GME, GameStop, Plug, MasterCard, Visa, Square, and PayPal, kind of all in the same boat. Some are actually been positive today, but that doesn't mean it was positive the entire week. So we'll discuss all those in due time. So let's go ahead and roll over to a quick update on Talos Energy. All right, Talos Energy, of course, has been down. I knew it felt like it was down. Obviously, they were around almost $15. But it's been steadily going down. Obviously, not good for Talos Energy. We need to keep the energy up. Now, how's Roblox doing? Roblox for the week spiked all the way up to almost $78 and has dipped as far back as almost, was that $67? So yeah. And that's roughly where it was last week, if you recall from last week. Yeah, I don't think there's a month ratio, but as you can see, this is like pretty much the first week, if anything, during IPO last week. And it was as high as, I believe, 74-ish. And then it kind of went up as high as this week to the 78 that we saw. But now it's been kind of settling back down to the 70, which is kind of like the range I was thinking about last week that we fall to. But is it now time to buy in? That's kind of up to you to decide. It's still very, very new, so you might watch it for 1, maybe 2 more weeks to see if it's considered a buy or not. But right now, it's kind of in the iffy boat. I think if it falls down to like 65 or 60, I think that might be a better buy. But of course, guys, don't follow my advice. I'm not a financial advisor. This is just my opinions, and obviously, I just love talking about stocks. And of course, you do what you do with your money. And me personally, I would wait for $60, $65. For a Roblox buy-in. But right now, I think 70 is a little bit too high for me, at least personally. But we'll definitely have to see and wait for another couple of weeks to see where it goes from here. Because it could potentially just skyrocket forward, so we will definitely have to see. But we will close this one for now. But yeah, guys, before we continue with the discussions, obviously, guys, if you haven't already, be sure to check out our sponsor for today's video, Public. What's great about Public is that you can own your own slice of a company right now by checking out the affiliate link down below. And I think there's only a couple of weeks left of this promo, so definitely grab it before it's gone, where you can own up to $100 or more in that slice of company. Now that could be Tesla, that could be Facebook, from one of the discussions for today's topic, as well as a lot of the high profile companies right now. Now, if you want a full share, we have 2 full shares right now in our other sponsor for Webull. Link down below as well. So definitely grab those 2 free shares just for simply signing up and depositing at least $100 into your account and investing in today's market. And of course, the market today is crazy, and that's what we're going to talk about in today's video. All right, guys, let's go ahead and remove some of the extra ones. Obviously, now we're talking about the highs and lows for the week, the big ones that I want to talk about. So let's first roll into this first one right here. Now, this is a very interesting beast right here. It's called Super League Gaming Incorporated. Basically, what this is an amateur esports community and content platform. Its proprietary technology platform transforms local movie theaters, PC cafes, and restaurants and retail venues into esports arenas. And it's based on Santa Monica, California. Now, This has been a massive growth. Massive growth. So let's go and flip over. You can see exactly where it started in the week. Let's see here. Actually, let's go back a week. So yeah, it was around $7 as low as, was it $6 roughly? $6.30. And spiked all the way to almost $11. That's a huge progression for the week. Now, I don't know much about this company. Obviously, this is a brand new one that I saw in the highs for the week, the top gainers. But I want to see if there's any 5-year history on this. All right, 5-year history. I think as far back as 2019. So it's not even that far back. So it's only like a couple years. So, but it was as high as I guess like $9 during the initial launch, and it dipped down right around July 2019, and it kind of kept going lower and lower and lower until like pretty much September is when it kind of settled a little bit up in 2020. And look at this, it spiked up all the way, and right past, it's almost dramatically past its previous high. So that's a huge progression there. So honestly, this actually might be a good buy. I think $10 is still pretty cheap, but I just don't know what else they potentially do. Let's actually look into this a little bit more. Maybe there's some news articles that we can read more about why the dramatic spike here. And then we can go and press forward. Unfortunately, this is the most latest news I can find. This is back in March 15th. So about, I think Monday? Yeah, Monday. Basically, Super League Gaming plus 9.4% pre-mark on extending their existing partnership with Top Golf Entertainment Group to broadcast a series of exciting World Golf Tours by Top Golf competitive events. Top Golf continues to be one of the Super League's most important and exciting partners, says Matt Elderman, of the Chief Commercial Officer at Super League Gaming. We have a shared belief in celebrating play through fun and accessible and competitive experiences that are brought to life through premium content. So it looks like because of this partnership with Topgolf, that's kind of like the reason why it spiked up. But they also do esports as well. So I don't know exactly if there's anything beneficial with esports in the market for them. But as of right now, that was the only positive news I can find that was spiked because of the partnership with the World Golf Tour by Topgolf Entertainment itself. I guess with that being said, there's still a lot of growth potential if they're not even going to mention anything about esports. I'm not sure how much foothold they have in esports commerce. I know there's another company out there, actually I think it's just called esports, that has I think a better foothold into it, I believe. I'm not mistaken. You can always correct me down in the comments down below, obviously, if I make any mistakes whatsoever in these articles. With that being said, this is a positive for them. Now, it doesn't say on this article how long that partnership is. If it's only temporary, maybe it's only for a year, maybe it's for a couple of months. We don't know. But if it is for a couple of years, this is actually a nice, good, positive news to potentially propel it even higher than that $10 mark that we're seeing right now. And according to consensus right now, a lot of it is a sale. So the consensus is pretty low, right in the sale mark. So that's not positive news for the general consensus, but it's probably not updated in real time, so they probably haven't seen the massive projection here. They see it on today's increase, and of course the dramatic increase for the week. So we'll definitely keep an eye on this, especially as this progresses forward and forward. But for the most part, this is actually very positive news for esports, especially with people staying at home, doing a lot of gaming at home. And Topgolf is not really something you could do at home. That's mostly like if you ever know anything about Topgolf, you have to actually go out there and actually physically do it. But it's more like a digital, almost AR-like experience, but not really, if that makes any sense. And it's more of a, it's not like traditional golf, but we do have a Topgolf near where I live. And I definitely want to try it one day. Maybe I'll do a vlog about it one day. So definitely, if you guys haven't already, be sure to follow me on my main YouTube channel, Talos, for all that content. But enough about this. Let's move on to the next high of the week. All right, the next high of the week is Upstart Holdings. Now, this is basically a lending platform partnering up with banks to extend access to affordable credit. So basically, if you ever needed a loan, you probably get a bunch of emails, a bunch of pop-ups saying, "Oh, apply with Upstart. We'll approve you where nowhere else will approve you," and stuff like that. And I personally have used Upstart. They have quite a high interest rate, at least personally when I use them. If you're gonna pay down the loan like very quickly, then this is definitely something that's very useful to just get that quick cash paid off within that month or so, or 2 months or whatever, at the very end of that loan. And that's typical with any loan that you get. But Upstart is one of those things where the interest rates could potentially go crazy. But we're not talking about that. Let's talk about the actual stock as an investor, not so much as a consumer. All right, so this is pretty much where it was for the week. Just kind of sitting around with at $60. Like no growth whatever. And then like 2 days ago, it just kind of spiked up. It went all the way as high as, let me see, about, wow, $126. That's huge. That's huge. What does it go? 60 to like double? Wow. Let's find out why. Let's find out why. That's what matters, right? All right. As with anything, it goes down to pretty much an upgrade to buy. So according to this article, real quick, Upstart Holdings climbs even higher with a BOFA securities analysis NAT, upgrading his rating on a stock to buy from neutral on a stronger growth outlook and margin upside. So he went ahead and raised the price target to $135 from his original $57. And it also says here the analysis is also bullish on the Upstart's acquisition of Prodigy Software, a automotive retail software company, which is very interesting. That's kind of like a totally different field. But as it represents a major step to expanding its adjacent markets to auto loans. Big one. Okay, I see where this is going. I actually didn't know about this. Like usually with Upstart, they had like more like personal loans, and I don't know if they dabble with mortgage loans or anything like that. But auto loans, huge. So I can definitely see why the increase in value there. Wow, that's interesting. Now I don't know if this would be a potential buy for me. Like was it $125? That's way too high for me right now. But I can definitely see why it jumped double because of that interest in auto loans. Okay, so actually I put last year, I think, from what this sounds like. So yeah, that is interesting. So yes, that's huge, guys. That's huge. It said it IPO'd last year, so let's do a 1 year history. So it looked like it IPO'd around, wow, that's super cheap, $30 IPO. So those who bought it in IPO and kept it, you're definitely banking right now. So obviously it kind of dipped a little bit around February 15th. And it went as low as like what, $47. And even then, it was a very good buy compared to where it is right now. I don't know if it will keep going up. That's definitely, you would definitely have to keep watching if you're interested in where it is going in its progression. Banks typically have a much more stricter guideline in terms of how they approve certain people, especially for like personal loans. Anything lower than $5,000, they typically don't approve a personal loan. Maybe 1,000, maybe at best. But most likely you have to go to like another third party. And of course, those other third parties have like huge interest rates. I guess that also explains why Upstart also has high interest rates. But as an investor, that's something definitely to keep a watch of because those auto loans can vary dramatically. But I'm hoping if they keep their auto loans pretty low for the most part, I definitely see a huge spike in potential clients in the future. All right, let's move on to something that we might be more familiar with. Facebook. All right, Facebook here. Interesting beast as per usual. Now for the week, it was pretty much right around, was it 273-ish? 272-ish? Now, obviously, for those who don't know what Facebook is, I don't know how, but if you don't somehow, it's a social media website worldwide. The company's products for users are free of charge and available on the web and, of course, mobile devices such as Android and iOS. This website enables users to connect, share, discover, and communicate with each other. So, obviously, let's talk about this real quick. Now, obviously, like I said before, this is what they had in earlier weeks, and they've been steadily going higher and higher. Now, that's all well and dandy and all, but check out its max history. Wow. So this is where it IPO'd, right around 25, maybe less than that. I want to say the IPO'd around $20, and it never held up. In fact, it kept going up, and it was a little bit of a dip here, right around 2018. But I believe that was probably during the controversy around Mark Zuckerberg and the whole data security and whatnot. But since then, it passed its previous high and kept going higher and higher. And it never let up. Now it's sitting at around $290. That is insane. Now, I remember buying this stock back in like, I want to say 2014, 2015. And it was only sitting around $90, $80 around there. and I unfortunately I didn't keep it. I sold it right around 120, 130. I still made money, but wow, I wish I kept it. But it's fine. You win some, you lose some, as they say as an investor. Let's find out why it's been going up, like especially from this week alone. All right, the first article I'll go find here that's pretty recent for today. Apparently there was an outage. I personally didn't experience any outage, but looks like here Facebook experienced an outage that interrupted its services, including a social network, Instagram, Messenger, and WhatsApp. The issue started around 11:30 p.m. and was resolved almost an hour later. And apparently that kind of coincides to the stock a little bit. So it went down, and then as soon as it went back up, it spiked, and it doesn't make sense. Around 7 in the morning. It happened much earlier, like around 7 in the morning. So I don't think it relates to that exactly, but I found that very interesting. So let's look around 1 o'clock. It did go down though. It did go down when the servers went down. So I find that kind of interesting that coincides with that. However, I think this one probably relates to it more. Facebook jumps 4.5% as Zuckerberg expects to manage through Apple changes. Facebook, a strong positive outliner in the S&P 500 today, up 4.5% and gaining and bouncing back from a slightly decline yesterday after CEO Mark Zuckerberg looks to change his tune on the upcoming privacy changes from Apple. Zuckerberg has increasingly taken an adversary stance against the big tech rival, but in a new discussion with audio platform Clubhouse, he said that Facebook may be better off this way. So that marks a sharp reversal from last summer when Facebook said Apple's changes to unique device IDs could cut revenues in half for its audience networks and ad business. Now Zuckerberg is saying Apple's changes might encourage sellers to use Facebook commerce products directly. Apparently, with that change of mind, that change of prospect, I guess, jumped it up to 4.5%. Obviously, Facebook is super expensive, and from looking at 5-year history, it's very likely it's going to keep climbing up. I don't know. It's very tough to say. Obviously, there was a dip here right around March 2020 because of the because of what happened last year with the pandemic and all, and it did again during the controversy, like right here, when he was in court and whatnot back in 2018. But for the most part, it's been steadily going higher and higher. So potentially $29 could actually be cheap 5 years down the line. So it's kind of up to you guys to determine what you want to do. But obviously Facebook has always been good. And it's just super expensive as of right now. I don't know if they plan on doing any kind of splits, but if there is a split coming up, I will definitely jump in the bandwagon and try to just buy into Facebook, because Facebook is not going anywhere, unfortunately, whether you like it or not. But even with the consensus here, it's kind of like around that mid buy, not quite a strong buy. Well, actually, majority of them is a strong buy. 30 strong buys, 1 buy, and 2 holds. So with that being said, that was pretty much all the highs. Obviously, there's other companies that had much higher highs, and obviously, as we go into the lows here, there's companies that have much lower lows. But these are the ones I kind of want to talk about a little bit. Why are those dipping in the week? Some of them have been going up, like from today's value, like PayPal and Square, but for the most part, the majority of the week, they have been down. And we can discuss that as we go into those particular topics. But for now, let's do a brief talk about with GameStop. GameStop started super high, but of course it finished super high back in last week. I want to say it was as high as like maybe 340, something like that, from last week, if I recall correctly. But it's been dipping down quite a bit. So another roller coaster for GME, another roller coaster. Now, let's see if there's any news on GME for this week. Now, this was one article that I found that might explain why the dip, but obviously, this is not, I guess, proportional to what it is, because obviously it ended at super high levels from last week, and it's only expected that this week is going to go down. So maybe next week we'll see it go back up. It's like it's one of those roller coasters, just keep going up and down. So there's one article that I found that's kind of interesting that was published back in about a couple hours ago, really. It says here, don't expect people to use the stimulus money to buy GameStop stocks, analyst says. Interest in the meme stock appeared to be wailing as Redditors' conversation and trading volumes have declined. Investors expecting GameStop stocks to get a boost as the latest government stimulus paycheck hit bank accounts will likely be disappointed, according to the securities analyst Curtis Nagel. He wrote in a research note Friday that in collaboration with the BAF-A predictive and analyst group, He analyzed the potential impact on game stocks from the stimulus checks are currently being made. I'm assuming he looked at previous forums from Reddit, and he showed there's like a kind of a correlation between the big stock prices and, of course, those stimulus checks. And right now, he's not seeing the positive impact from what's been paid out from this week. Obviously, this is just his speculation. It's only been a week, so that's why I'm kind of curious to see what will happen next week, to see if anyone will actually jump into buying it. Honestly, I think people are just smarter. They know not to buy in at such a high value, so they're probably waiting for another dip to potentially happen before they buy in. I want to say like when it hits like 100, 150, then we might see another big spike back to like 200, 300 potentially. But obviously, I am not a financial advisor, so don't follow me and try to buy in around 150 or 100 thinking that's gonna go back to 300. We definitely can't make an assumption on a stock like this that's just so sporadic and like unpredictable, but I'm very curious to see what the data will hold in the following week. But let's talk about something new, been massively going down, and that of course is Plug. Plug Power is a leading provider of the alternative energy technology focused on design, development, commercialization, and manufacture of hydrogen-fueled cell systems used primarily for the material handling and stationary power markets. This one was interesting because I remember I bought them in like around, they were like probably like less than $10, I think, a while back. And I know that's when I bought it, only because it was so cheap, and I kind of believe in the whole alternative energy and all that good stuff. And for the most part, let's kind of flip over to check this out real quick. So this is where it was in the earlier weeks at $47, and it dipped down. It dipped down to, looks like, as low as, was it $35? So that's a massive dip from 47 to 35. But when we look at the 5-year history on this beast, it was super low. It was super low. Like I was saying before, less than $10 is when I bought it initially. I want to say it was like 2020. So yeah, so it was about like $4 to $5, $6 around there, and it's been dramatically going higher and higher. It went as high as $67, and that was around, was that January 2021? Yeah, about January. 73 is kind of where it peaked, and it's been kind of going down and down and down. Only because I feel like it's overvalued. Especially at 73, that seems like it's overvalued. And right now, I feel like it's just been underperforming. And that's why it's been going down consistently. Right now, as low as $38. But let's look at some articles right now to see why it dipped again this week and why so massively. And of course, as expected, it came down to that financial results. And of course here, Plug Power dropped negative 14.9% post-market after seeing previously issued financial statements to FY 2018 and to FY 2019, and for all quarterly periods in between should no longer be relied upon due to errors in accounting. Whew, that's a big one. That's a big one. The necessary accounting changes will require reinstatement of all financial statements during that time period. So, wow. That is huge. Okay, let's read more about that. The company will not be able to file its Form 10-K for 2020 by the March 16 deadline. Also, a big negative there. Plug says the error primarily relate to reported back value of right of use assets and related financial obligations, loss for certain service contracts, impairment of certain long-lived assets, and classifications of certain expenses previously included in research and development costs. It has recently went up today, but from what we saw, huge dips. Is it a good buy right now? It's hard to say. It's hard to say, especially with the errors in accounting. That's a tough call for me personally. I will be kind of look more in that wait and see. If you currently have stocks, I would definitely hold. Do not sell. But if you're trying to grab into it and grab more, maybe do it kind of this kind of stagger approach. Like I mentioned, maybe buy a few here if you want and see where it goes from the following weeks ahead. It could potentially reach that $70 mark again. I don't see that happening right away, so definitely be cautious about that. Now, the big news for the week: MasterCard, Visa, Square, and PayPal all being down for the week. Why? What happened? So let's discuss. Now, this is all kind of released together, but I'll definitely want to look into each individual. But obviously, for those that may not know, MasterCard, Visa, and Square, and PayPal, they're all different sources of, like, obviously, MasterCard and Visa are more of the credit card, whereas Square and PayPal, they're more the digital financial institutions, if you want to call it that. But they've all been down for the week. And they're all really expensive, honestly. But we can talk about that as we roll into. Check out the charts. Obviously, MasterCard right here. Started out pretty much the usuals, and then it dipped dramatically today, as low as 300 and was it 50? So dramatic drop there, but it's been going steadily up, kind of recovering that initial loss. What happened around this, like around 7:30 in the morning until right around, I guess, 9 a.m. this morning. Let's look at Visa. Kind of same deal. And then right around 7:20, 7:30, a massive dip. But unlike MasterCard, it didn't recover as much as it did. Square. Let's look at Square. Roughly the same deal. But of course, this happened almost yesterday actually. So more of yesterday's was massive dip. Right around 10:30 yesterday, and it's been steadily going up as high back at 228. But now going back down to 224. PayPal, roughly the same as Square. Kind of coincidental that it's all happening around the same time, and also we're kind of recovering around the same time as well. Let's take a look. Let's take a gander. All right, there's two articles I want to look at in particular, but this one is kind of breaking news here. The U.S. Justice Department probing Visa over debit card practices and source. The U.S. Department of Justice is investigating whether Visa engages in anti-competitive practices in the debit card market, a source familiar in a matter said on Friday. Obviously, they declined to comment, and somehow this is also affecting MasterCard as well. What I find interesting about this article real quick is right here, this quote right here. The Justice Department has previously investigated the credit card payments industries, but settled with Visa and MasterCard Incorporated in 2010 when they agreed to allow merchants to offer consumers incentives to use a low-cost credit card. But what I also find interesting, real quick, is check this article out. The stocks of Bitcoin. JP Morgan offers BTC exposure at ETF in sheep clothing. Cryptocurrency adaptation has been penetrating the mainstream at an exponential rate. You guys know about that. I think Bitcoin is like almost 60,000, if not already at 60,000. While most investors are going straight into buying the likes of Bitcoin and Ethereum, a few skeptical investors went to invest in a crypto currency and economic without exposure to the token's volatility directly. This volatility is evident in the recent all-time high of Bitcoin at around 61,700, reached back in March 14. So that was like what, Sunday? Before dropping to trading around 56 and then rising around 59 at the time of the publication. Bitcoin market capitalization has now surpassed that of Visa and MasterCard combined. Huge. And that might be why it might be linked to the drop of MasterCard and Visa, because of that alone. People are jumping into Bitcoin because of how high the value is. That is insane. That is insane. And of course, there's a couple of people right now that's going back into Bitcoin mining. Also kind of bring it back into surge, because now when you look at it, especially if you have like one of the higher end graphics GPUs, it's much more easy to get like $5-10 daily for mining Bitcoin because of how high value BTC is right now. And of course, that goes back to Ethereum as well. I think Ethereum is about $2,000. And it's crazy to think about too, because when I was looking at the 1 year history of Ethereum, it was like, I want to say $200 about a year ago, maybe less than $200. And now it's almost 2,000. Craziness. So now that Ethereum is actually allowing you to stake its coins and actually earning a type of dividend from staking that coin, you can just earn free Ethereum. And the same applies to mining BTC. You don't have to buy using own cash. You can actually earn free cash, technically free cash, from just mining it. Now let's go into a little bit of the Square and PayPal. I feel like it's kind of still related into a certain extent, but not like as directly evident from the charts that we saw. Okay, maybe release a little bit to BTC. It says here, Dorsey's Cash App lets users send Bitcoin for free and announced a $1 million BTC giveaway. Square-owned Cash App announced on Wednesday that it will enable its customers to send Bitcoin without any transaction fees. Cash App also tweeted that it will be giving away 1 million BTC dollars. I guess $1 million equivalent in BTC in order to celebrate this announcement. And so to even reply here, you receive 0.0019 BTC, roughly $104 from the Cash App. That's actually huge. Maybe I should go into my Cash App right now. But yeah, that's crazy, guys. Oh my god. Square has posted a very solid performance over the past year with 36 million customers using their services. A year-to-year increase of 50%. So Square is actually doing pretty well, but it doesn't explain the drop and the negative for the week. But if you go into the chart real quick for Square in particular, this is for the week. Obviously, when the announcement came, that's when it spiked up to like 240 something, 248 roughly, and then it kind of dipped down and it's been dipping down again. But what happened here to make it dip down so much is to include PayPal as well. Yeah, unfortunately I can't find anything in relation to why the dip here, but I'm assuming it maybe correlates to BTC somehow. When actual coin dipped down in price, potentially, it's just BTC in general and the rise and craziness that is of cryptocurrency. Now, obviously, guys, I am not a financial advisor. I can't tell you what to do with your money, as I mentioned in the intro, but obviously, there might be some facts that I might have gone wrong. You can always correct me down in the comments below. Now, obviously, the Talos picks for the week, it's kind of between a few things. Obviously, I'm definitely kind of interested in the whole Square and PayPal aspect of it, especially when it comes to cryptocurrency. So definitely keep a watch out for those. And of course, Plug. Plug is actually a very good stock. It might be a little bit too high at the current rate. Kind of maybe wait out, see where it goes. But that's also one of my picks for the week. And of course, Facebook. Facebook I think is always going to be a good buy, and I definitely see one of the future companies potentially being as high as 500 to 1,000. Maybe not in the immediate future, but definitely 5-10 years down the road, we'll definitely see that grow into a $1,000 share. Just look at the history of Facebook. You can definitely tell that, you know, eventually that growth will keep going as long as they stay innovative. That's the big thing. Obviously, they own a bunch of stuff like WhatsApp, Instagram, and those are still generally in people's minds. As long as those stay in the forefront of people's minds and people using it, and obviously users growing in that platform, that will also keep increasing as well because of that. And I believe Facebook also owns Oculus as well, so the VR technology. So they own a lot of stuff, and definitely keep them in mind and see if they're worth buying, especially right now. Now, in the comments down below, definitely let me know what stocks I may have missed for the weekly Stilly Stocks report. There's always multiple stocks that I might have missed, but these are just the main topics for this week. But yeah, guys, that pretty much concludes it. Hope you guys enjoyed it. If you guys did enjoy it, definitely consider giving us a like. If you guys enjoyed it that much more, consider also giving a subscribe as well. Not only do we do stocks, we also talk about the gaming news, entertainment news, anything that we find interesting here in this channel. That's all I got. We'll definitely see you guys next week for another weekly Stilly Stocks report with your host, Talos. That's all I got. Till next time, this is Talos signing out. There, guys.